Hello everyone, this video is going to be showing you an example of using several of my indicators, the God Awesome indicator, the 88 Luftballons indicator, and the LEMA30N indicator. And the objective is talking about conditions that I call 8 balls, I call 9 balls, terminal waves, and end lines that are of help when you want to find out what is going on in the market, i.e. where is it going to turn or what is it doing overall. So this is how it looks like when you plot these indicators on top of each other, plus there's another one on the bottom which is 10 sample stochastic, slow stochastic in red, and an RSI2 in black, and there's a bunch of levels predefined here as well. So where do we start? So what happened on Friday was a mean reversion. So let's discuss what is the mean. Well, it happens to be, as I found out, the 414 EMA high and low, at least on euro-dollar, because that's what I'm trading. I actually engage in automated trading, but I need to supervise what my routines are doing, and I need to teach them properly if I don't want to suffer losses. So it is important that I have an understanding, and sometimes I need to cancel orders. So I am the supervisor, so I need to know. Now, the 414, how did that come about? So first of all, what you're looking at is a 30-minute chart. A 30-minute EMA pair that is in a green shade up here. The upper one is pulled on the highs and the lower one is pulled on the lows, and this is what I call the green river. Now this moving average actually comes from the 1 hour chart, which would basically be a 207 EMA, and I never use closing prices. I always use a section which is giving you a wider range, and it can actually define you risk. For instance, if the market was to separate from the mean itself for a longer period of time, so say 20, 40 samples back, whatever you choose, and that's the first entry, then basically 1 pip above hitting the low for the first time, you could go short and you could place your stop loss something like 4 pips above the high of the green river. This green river and other moving averages that you see here, they all part of this LEMA30N routine that I'm going to put on my blog soon after finishing this video. There are different versions of the LEMA by now there, but this is basically the moving average is only going to be plotted on the 30-minute chart, nothing else. And here the other moving averages that you would see here, actual moving averages would be this 135 EMA, which I call as Mr. Maroon often. That's how I refer to it. And again, no closing prices, which would be somewhere in between. There's just lows and highs, and well, I'm not gonna go into the whole history of the lemmas, so LEMA30N A's, which I call them long-term moving averages. The reason is that they are way higher than 200 samples. So for instance, this one is 414 on this particular time frame, and this 135 sounds like, well, it's below 200, so it's not a lemma. And well, it's true on this particular time frame. This is not a lemma, it's just called Mr. Maroon. It doesn't qualify to be a lemma. But if you think about it for a second, then what you would find is that this is also the 828 sample moving average pair for a 7.5 minute time frame. And likewise, the Green River would actually be an 828 sample lemma for the 15-minute time frame. So it just depends on what your metric is, you know, what's your time frame. So on this time frame it's not a lemma anyways. Let's go, what is this here? So this chartreuse color, interesting name, is basically a fluctuation maximum away from the bottom of the Green River. Now why is this important? It's again, the time told me that there is something about 38 pips away from the Green River that completely changes the behavior of the market. The explanation is that the distance between these two, it should be 38 at any given time on the euro dollar, because this is the fluctuation maximum. So I call the fluctuation on euro dollar 32 pips, and the 38 pip would be the maximum. This guardrail is basically a high point. So picture this, the Green River is sitting in a valley, in almost like a ditch, but it's not, it's a shallow valley, and this would be the low point. The high point of the valley, the cusp, would be the guardrail. This line, which is not a moving average, it's a displacement of a moving average. Now if you go further down, I call this line the purple haze, and that would be 3 times the fluctuation maximum distance from the Green River. So I call the Green River zone from the lower guardrail to the upper guardrail zone 0. This is where the bulls or the bears have no advantage over each other, and if you want to trade in there, you're gonna be basically in the kill zone, where you're gonna be stopped out. You can't take anything seriously. All moves tend to fail and roll back into the low point of the ditch. Now here's this zone below the lower guardrail to the lower purple haze. This is basically bear zone 1, so the bears have the upper hand. Of course it is possible to get out of this section as well on the upside, which would be of course a counter trend move. Nevertheless, as soon as it was pushed over, as you can see here, over the guardrail, then the price basically with ease found its way back to the low point, which would be the mean reversion itself that we are talking about. Alright, now let's get into the more difficult part, which would be these indicators. So the God Awesome indicator has basically a lot of flags by now, but I'm only using a few of them. exit arrows I left on, don't know why. Breakouts, yeah, I want to talk about those a little bit. The divergences are still on the screen, which is alright. Sharpies I left on. And let's see, we want the ending moves. Ending moves are referring to the end lines, which are another findings of mine, as well as the terminal waves. That's two zesty chapters, so let's get into it, and then we discuss the 88 lines again with a few parameters, and I actually turned off the mesh. Okay, so there's a new thing with these 88 lines, and that would be the 9 ball, which you see here in aqua color. And so let's start. Let's go back. We are on Friday, which was the 19th of October 2018. And actually we go back one more day to talk a little bit more about what is a terminal wave and what is an ending line. Oh boy, here we go. So I'm writing a book called Computer-Aided Trading, and you're gonna be able to find out in details and in computer lingo, so definitions basically of what I'm using, what I'm working with. The importance of naming conditions is that you can use them as each other's filters or any filters. You can build them into any filters in the future, for instance, for automated trading. Now, on this screen, the ending moves or end lines would be plotted in these purple looking lines. They actually are shifted by 1, and the reason is that I don't want to cover up a different plot that would be right below it. For instance, if there was a black terminal wave right here, then this would be just placed above it and you would not see both of them. So that's why I actually shifted the end lines one sample out. Now, what is an ending move? The ending move is basically stochastic signal. Now, if you look down below here, you have this 10 sample red stochastic, slow stochastic, that is at some point crossing this middle section and makes it to the top. And well, let's call it a crossover, very witty. Basically, what I'm trying to find here is a high read, both on stochastic and RSI2, and in this case that would actually also be a fractal and an 8 ball. And what I'm also looking for in terms of an ending move is where did it cross over, where was it below before crossing over the middle section. So this reading, well, let's see, let's do it like this. Let me see, here we go. So this is a 1560 reading, and then there's a 41 reading. The 41 reading would be what we're interested in, because that's right below the midpoint, and that would be corresponding with this bar up here. Like I said, this was displaced by 1, so it actually ties in from the bottom of this and goes to the top of this. And so why is this interesting? It is interesting because I call this ending move basically a clash of forces. If I plot this line, that would ultimately give me two boxes. There is a displacement of these boxes from the top, 16 pips, and the bottom, it should be 16 pips, maybe I didn't grab it right. So basically this is spaced out, it should be somewhere about 16. 16 pips is basically a half fluctuation zone in case of the euro dollar. I hope I'm not losing you just yet. So now we got a clash here, and then the market would have to make a decision. So I don't want to use this word indecision, but it's crazy because it actually is terminated here. But the point would be that with this displacement you can actually find a zone where a reversal could be starting from. So let's see, let's check into the book for a second because I know I looked it up. Here we go, end lines. So this is what my book would say about the end lines. Plain English, the end line ends up in a fractal. It has a low-high stochastic reading with a recent crossover of the stochastic oscillator of the mid zone, and the size of the end line has a minimum 1/4 of fluctuation zone. Yeah, the 1/4 of fluctuation maximum, and shorter than 3 times fluctuation maximum. Okay, let's go back on the screen. Okay, so you had this clash here. What's gonna happen here? You're gonna be expecting a reversal coming from either this box or that box. And in this case there was a brief reversal. As you can see, this low is already penetrating into the blue box, and then you had a quick move up. Well, apologies for that, somebody was ringing me. Okay, so now we have this little red thingy up here, which is part of the God Awesome indicator by now. And what that is basically highlighting an area which again is from the stochastic indicator. Basically, when the stochastic steps out of overbought, in this case that would be 80, it doesn't line up with these lines here, but basically I'm looking for the first print below 80, and then I'm taking the high of that particular bar and utilize it as an entry. So that's another entry signal that was left on to show you basically an area of a kiss goodbye, and that's when the market basically collapsed. It was hovering by the guardrail, which is again the high point. And so here first what you see is you see buying come in at the touch of the box, basically very short penetration, like basically the top of the box, and then you see the sell, and that level was brought on by the stochastic leaving the overbought area. So the kiss goodbye was to the overbought section of the stochastic, and then you got your fall, and an extension down to this 9 ball. After this ending line, the next ending line that is plotted is right here, and it again gives you the boxes with their displacements, and what you would find is again this box is actually, the top of it is lining up with the actual purchase level, so it was calling it quite accurately, I would say. And so here you have your short entry, and then the market goes down, nothing happens, and then you have a terminal wave which prompts a buy, and that buy doesn't really last too long. It actually ends up in a continuation divergence, which is between this reading and this reading. Both are fractals, although they are not plotted, and the point is that the market reached a lower high with a higher stochastic reading. Clearly this is way higher than the reading over here. That was your continuation, and when this flag played out, you had the extension move, which was, by the way, a terminal wave, and in this case it ended with a 9. Now the 9 I started plotting basically today, and it is different from the 8 balls in only one thing, that it doesn't go oversold enough. So basically it's think of it as a higher time frame head. So if you have a higher time frame printing ahead, then you're probably gonna have a longer move coming out of it. In this case it prompted all this counter move up, and I'm sure people got killed with their shorts or pushed deeply underwater. On the way up there was one ending line printed. Now you need to grasp this concept of the ending line. Although in the name it says that it's ending something, it doesn't necessarily do that. What do I mean? You see, this ending line actually ended in a terminal 8. This one doesn't. But what it does, it prints a box down below, again 16 pips out, which is half fluctuation size. So in case the price was to come back down here, this would have been a purchase area. And there was 2 more lines here. One is basically the terminal 9. You're gonna have the terminal 9's buy level would have been this, and this one is again stochastic, leaving the oversold area print. So the low of this, and I'm actually using one pip displacement. So if it was to penetrate below the low of this bar, then you would have a buy. So okay, now here we got the ending line. The ending line did print the lower box, but it did not print the upper box. This is some intelligence from my God Awesome indicator, that it recognizes that the market may be penetrating into the 0 zone, so basically would be leaving the bear zone 1, which is zone -1, and basically it is eliminating the possibility of you wanting to short over there, because there, just because of the move being in place, the ball after the high point would just roll down into the valley to the low point. Okay, so I said a lot about ending lines already. I guess I wanted to show you a couple of these 9 balls, which they don't come often, and here is one, and as you can see it, the market had a significant move out of it, and in this case it actually got caught or captured by the upper guardrail, So this number 9 was actually printed in the valley, in the 0 zone. Yet again, it was a good signal. As soon as it cleared the Green River, you could have gone more heavier in the direction. So I know there was one more print somewhere. Okay, I'll look it up later. Oh, here's one. Now, well, this is in the 0 zone, so you only had the move go to the Green River. Actually did not surpass Mr. Maroon, and then there was a pullback, but the signal is still valid, and you still got something out of it. It's just you should not be taking the zone 0 or the neutral zone much too seriously in terms of wanting to see a trending move out of it. Of course, eventually there would be a trending move, but before that you're gonna get chopped to pieces probably. So alright, so we discussed that on Thursday there was a turn. So if you were to plot my indicators, then this ending line with a terminal 8 would be an entry signal for you. And as you could see, it didn't matter that half an hour passed by, another half an hour passed by, and basically an hour and a half, 2 hours later, you still would have had a price that was never even superseded. Well, this would come back here and it could knock you out if you have like a trail stop going. But with high probability, this move would have worked in your favor, and you could have made money on the downside. This ending line did not have terminals, but it did give you the boxes. So here was one box that could have given you the buy level. Here was one short signal that could have given you the kiss goodbye stochastic backtest signal. This buy, as you can see, it actually punched into it, and there was actually a long trade here, but it did not actually reach the high. So you would need to use a trail stop of some sort. But this is not a dangerous trade by any means, because it moved up like 16 pips from there, which is half fluctuation size, by the way. And using my smart trail stop, after 5 pips you would have had 1 pip gain logged in, and after 8 pips you would have had 2 pips logged in, and after and basically if you were long, then that would be your gain, which is you pay of the commission depending on your broker. This can be say $7 or $8, which means that you're gonna have 1.2 pips gain left out of a long if you were to play a long here. But this is not a great place to play along. The terminal wave did say that it ended here, so that would be encouraging in some sense, but the move wasn't all that great. And I did mention, I believe, that we were expecting another terminal move out of this as soon as the high, this high, which was a fractal, was made, because this was a continuation divergence highlighted by this brownish line here, and then you had your terminal move down. So as soon as this high was printed, what you could have figured is that you're gonna have a maximum distance between 32 and 38 pips, and in this case it was something like 36ish. But the point is that, for instance, you could have placed your buy order, or just if you are short, you could have placed your sell cover 32 pips below the high. Would have been here, and if you were not short, then you could have placed your longs, again 32 pips, which is fluctuation size, starting here and possibly adding more. Up on the turnaround, you would have a buy level here that basically never gets touched because it doesn't go 1 pip below this, but because this is a terminal wave and you have a 9 print, then the second open after this bar, which would be 1 open, 2 opens, this is where my routines would pick up the long, my terminal 8 routine would pick it up, and so this is a buy level. And how much would the market move against you? Well, something like 5-6 pips, and then you have the rest of the day to enjoy. Okay, I discussed already the ending lines, terminal waves. This ending line, that it plotted basically another support which was not retested, and it did not plot the upper gold color box, because of acknowledging that you are entering into the different zone, into the valley where basically the slope would take the price down. So upon conquering this high point, it really doesn't take much for the mean reversion to completely play out. I still left the numbers out, which is where my routines would have tried to sell with their individual stop losses. By the way, this one wasn't hit, but I thought it would be better to completely eliminate wanting to sell at this level. Now, what I was trying to show you here was something that you can see here. I'm always calculating the 32 pips as well as the 38 pips distance from a high and from a low. These are based on RSI2 lows and RSI2 highs, and when the market was here, obviously I had a white line pointing down from this high to this 32, and there was the very box where you would be rolling out of your shorts and into your longs, but down here. And as you can see, after hitting the Green River, there was a pullback. By the way, the Green River is one obstacle. Moving averages in general are obstacles, but I do not have too many of them plotted, as you can see. And the guardrails and the purple hazes, and if we go further out, there would be something I call the icing. If you're curious, that's 5 fluctuation maximum away, but yet again from the mean, which is the Green River. You had this pullback, which was almost exactly 32 pips. So if you went short anywhere in the Green River, well, this was your target, which could have been figured and was figured by my God Awesome indicator that is always plotting the fluctuation size and the fluctuation maximum, the box where to expect turns. After that, you had a bounce back up, and this was a second touch of the Green River. Now, the Green River, sometimes I refer to it as Green River, sometimes I call it Green River Monster or Green River Killer, and this Green River actually has the power to kill any move, terminate any move, and 2 touches are more than enough for a move to be completely kept. And so the expectation here is now you got a price sandwich between Mr. Maroon and the Green River. The expectation is probably further consolidation or a break back down and finding support somewhere around the guardrail. That's one possibility from here. What else is plotted on the screen? There's also divergences discussed earlier. So there's a couple of reversal divergences here. This yellow one, another yellow one, and another yellow one, and another yellow one. So these are just complementary information, just to have the sense, the feel for what is happening. These Sharpies are sharp RSI readings, and I actually don't have it down on this oscillator because they are based on RSI 8 readings. And as you can see, if they start printing, then you got a retest of that area here, and this one would line up with something. It would line up. So as you can see, it actually lined up with this breakdown at 1542, and this rally back was almost like a back test of that area, although it did not make it all the way there. You are off by 7-8 pips. This would be it for the current video. I did have some more definitions, I suppose, to show you. So these are things that I say about the Green River, Lemma, Maroon, even fluctuation zone. Now you can read on your screen, you can pause it. And a little bit of information about terminal waves. And what you see on the screen right now is a stochastic filter. I wanted to point out on the chart that there was something that could have been an ending line, yet it was disqualified by the stochastic reading being above 34. This is, by the way, part of the God-awesome indicator, and it is currently, let's see, shrink it down a bit. It is currently something like, yeah, close to 3,000 lines by now, and as you can see, it's not full of comment lines. That's not the very reason. Thank you for attending my video. Feel free to subscribe, as I'm going to be posting in the future. And as a reminder, there would be a book coming out next March, and it would be called Computer-Aided Trading by Achilles Dent, which would be me. Thank you for coming, and I'll see you in the next video. Goodbye.